Hello one and all, welcome to another video. It's the end of the week and I just thought I'd do a quick recap on an interesting trade from yesterday. It was on the pound versus the Australian dollar, which seems to be in the flavour of the week for me. I think I had about 4 or 5 trades in a row before I found a trade on the euro versus the Australian dollar. You can go in phases like this where a certain pair tends to present a lot of opportunities. There's absolutely nothing wrong with that. It's just part and parcel of trading. It doesn't help that certain pairs are struggling for movement, especially yesterday. The euro versus the US dollar was incredibly tight, and the pound was reasonably tight after the initial big move post UK data. So what we've got here in front of us is a pound versus the Australian dollar chart. It's a pip range chart, my speciality. So what we can see here is this is the initial move up prior to the news, and then it came all the way back down on the release of the news, and it drifted higher. I think it just made a brand new high about 13 minutes after the news, and then it started to come off. And what I'm going to do is let me just draw in a line here. So it's my dashed line. You can see here when price was drifting upwards, it touched it here and came back down, and then another touch poked its head through and came back down, and then on the release of the data, you'd find here that it stopped here and then wound its way back up. On its way back down, all these touches here, let me zoom in here, so we can see all these touches were making me think, okay, this is showing me that there's an interesting level in play. It wasn't a noticeable level on a time-based chart, but with the advantage of pip range charts, you can clearly identify certain mini levels, I will call them, and how they can play out. So I've marked it up at 173.58.8, and what I was doing is I was waiting for a break of that level and then I would enter. So you can see my entry here at 173.53.5 and I exited at 173.33.9. So I waited for this candle to close beneath here and took an aggressive entry and traded it all the way down. You can see here that was my actual initial target point here, but I got some positive slippage of about nearly 1.2 pips, which is quite rare, but very helpful indeed. So all there is really is to it is just simple trading. You don't have to do anything too complicated. It's very easy to do. Just mark up some levels where you think you're witnessing some price action where it keeps on touching that level. Make a note of it, and then when you do see a break, more often than not, you will find it advantageous. Thanks very much.